Hey everyone, welcome to Value Add, where we talk about everything related to alternate investing. Ever wondered why or how people start companies? Why do founders start companies, right? Like, what is the motivation behind it? What is their drive? Where do they get it from? How do they go from an idea to actual execution? Well, I asked the founders that we've interviewed on our podcast the same question. Here's a quick recap of what they said. Welcome to Value Add, your edge in building wealth.
I was really interested in investing. So I started investing in real estate and, of course, stocks and bonds, and invested in just about everything except for farming. I didn't even realize it was a possible investment until sometime after the financial crisis, when I saw what had happened to a lot of real estate investments and started looking for a way to diversify further. One of the things that started to be appealing to me was farming and farmland. I had traveled extensively in the military and been to a lot of places where people are much more reliant and in touch with agriculture than we are. They're in the food system. Started looking into that asset class and decided I wanted to invest in a farm. And at the time, this was back in the mid 2000s, there wasn't really a great way to do that. There were some agricultural REITs, some farmland funds, and of course you could invest directly into a farm if you had enough capital and if you kind of had the know-how and knew what you're doing and had a relationship with a broker and all those sorts of things. So I didn't really like all those options. So kind of took the long way around and decided to start Harvest Returns to allow people like me who were interested in farming to invest in a much more simplified and streamlined manner.
When I started to look to invest my own capital, I realized that the real estate private equity funds have $10, $20 million investment minimums, but even the smaller real estate investment funds have minimums of $250,000, $500,000. For my own capital, I couldn't gain access to those private equity funds. So I created CityVest to provide unique access to what I think is the best asset class, real estate private equity funds.
I was very fortunate getting involved in real estate from a young age. I bought my first apartment in 2012. I've been lucky enough to invest in a few other real estate projects and syndications. On the blockchain side, it was probably 2017 or so when I was moving some money across from Australia to the US. Got picked up by AML, KYC, got frozen for 3 weeks. They had to push the close date out of the house we were buying. And I was like, man, that sucks. And then a couple of years later, I had to move 50 grand again from Australia to the US, and we did it on USDC stablecoin. I was like, oh, wow, that's the future. That ultimately led us to Honeybricks in 2022. We started the company. I was really, how do we bring that really powerful technology of instant settlement, removal of third parties, that sort of stuff, to an asset class? Me and my co-founder both love, which is real estate.
When I started to have some money and think about investing on my end, real estate was a really natural place for me to look. I started to look around the market, and really the options are public REITs and then private REITs. There's a lot of other people making money in that value chain other than the investor. Looking around at kind of the options for direct investors, it felt like you had to know somebody in order to get into a real estate deal. Around that time, I started to get familiar with the passage of the Jobs Act. That basically allowed for investment businesses to get online and start talking about investments the way that other kind of digital businesses do. This new method of that connecting to the customer, kind of shedding light on an industry that had been really opaque. These individual deals are kind of back room happening at country clubs, not a lot of information available. Equity Mall was born on the idea that the internet could move this old business online, bring the visibility that the internet does, bring some of the same kind of institutional processes that you have at a big asset manager to this world of more middle market commercial real estate investing.
I found myself at AngelList, which was super compelling. And it was a really refreshing experience for me. But even then, it was still very limited. The thought of how about anyone and everyone can invest in the same way that a retired Goldman Sachs MD or a surgeon would, and the law that would allow for that changed in 2016 to make that feasible. That's when I was like, all right, AngelList was fulfilling, but I didn't think it was ultimately something that I could pursue meaningfully for 50 years. It was still rich people getting richer. And so the model of truly democratizing finance, making things available to those who didn't or couldn't have access to it really resonated with me. This last iteration now lasted for 7 years, and I can see myself doing it for another 70 easily.
Started dabbling with avenues to generate some income security. I found some good success in real estate. Bought my first home in 2014 in Sacramento, California. The numbers were very different at the time. It was $96,000, 3-bedroom, 1-bath, cheapest home in the entire city. The guy that sold it to me bought it out of the bottom of the last recession for $40,000. I was like, oh my gosh, made a killing on it. But anyways, that's to say, that first home snowballed into a little bit over 10 homes. Then friends and whatnot would come to me looking for advice on how to get started. There was never really a platform to point them towards. So ultimately, that became the genesis of Doorvest.
I've always been saving and investing everything that I could since I was a kid. So naturally, the second I've managed to get any significant income, I've put it towards investments. At 22, I ended up purchasing my first apartment. That gave me the financial freedom that I wanted. I had the ability to tell myself that I will diversify now into other asset classes. That's what led me to less known alternative assets. Within my process, me and my co-founder, which is also my husband, we started the discussion about exotic assets, what you call art, watches, wine. High net worth individuals, wealthy individuals have been investing into these assets for hundreds of years, but they are not accessible to the average individual. And we believe that there was the time for someone to do this for alternative assets, exotic assets specifically. So that's how we've ended up building a platform that facilitate these transactions, but we knew that we are not able to provide these assets ourselves. And that's where we decided on the marketplace model.
I was looking to build a diversified portfolio. In order to do that, you're looking for these uncorrelated assets. So this asset class, wine and spirits, it was really interesting to me in terms of performance. It is largely uncorrelated to traditional financial assets. What was interesting to me about the asset class is that it's highly economically inefficient. It's very opaque. Information asymmetry is rampant, which allows you to create an advantage and source assets below their intrinsic value, which is exactly what you're looking for in any sort of value investment. We ran a small portfolio, generated about 30% returns. When we look to get broader exposure, the only way to invest in the asset class was basically you needed to cut a $25,000 check to someone in the UK and you would get a list of wines back 3 weeks later. Really inefficient, opaque, largely inaccessible, and frankly, just not a financial product. So with that in mind, we spent 8 months with the SEC setting up a structure under Regulation A+ of the Jobs Act, which allows us to curate thematic collections of wines and spirits. Anybody can now really efficiently and transparently get exposure to the asset class, solving those problems that I had just laid out. So that's what we're doing. We've been doing it for just above a year and a half. We've done about 60 offerings on the platform, raised about $7 million in outside capital from venture and angel investors. And our mission here is to create a new asset class.
I graduated in 2009, so interesting time to be joining traditional finance. I was on the business intelligence side for wealth management. After a year and a half, everyone was like, you should go to the buy side. Buy side's better than the sell side. So I picked the largest buy side shop on the street. I joined the operations side of fixed income portfolio management. After a year, I was like, I'm done with this. I don't want to do finance ever again. So from there, started my own company, tinkered around with stuff, tried to figure out what I would be when I grew up. I ended up launching a consulting company that helped other founders build their companies from the ground up. So we gave them all the resources from product to marketing, to branding, to engineering. Had a couple of unicorns come out as case studies and clients coming out of that, which was fantastic. And they got the itch, right? After like 5 or 6 years of doing that, I was just like, you know what? We have like a team that knows how to build companies. We have good ideas. We know VCs. We should just do something the venture-backed way, if that's the case. That's kind of how Percent came to be.
Realize that my passion really is startups and I want to participate in them in whatever way possible as an angel investor, perhaps. I thought I wanted to have an impact on the world somehow, and leave a legacy, participate in exciting companies. I couldn't find what I was looking for. I started the MIT Angels Group. We have multiple chapters across the country and across the world at this time. But I focused at MIT Angels Group on what I called as deep technology. So I defined it as companies that are leveraging breakthroughs in science and engineering to have an impact on mankind, to change the trajectory of humankind. Having done that for about a year and a half, I decided time was come for me to step down because I realized there is a very big opportunity there. These companies have the potential to have tremendous impact, and there's lots of investors who see that and
Yep.
are eager to participate, and they don't have access. I was a case in point at that time, for example, where I didn't have access. So I started PropelX originally as a way to expand what I was doing at MIT Angels to help ordinary accredited investors get access to deep tech startups.
And that's today's value add. If you like today's video, hit the like and subscribe button below. For long form written content, subscribe to my Substack. Otherwise, follow me on Twitter. See you there.